Okay, today is Monday. The market is just about to close in under a minute, and it looks like it's going to be a down day. Unfortunately for my trade, because I have my 57.30.35 bull call expiring today that I put in last Friday. So the first trade of the month is going to lose money. But what about going on to tomorrow? Well, even though today is a red candle, it still stayed above this red line, which is the 50 EMA. And because it tried to go below there twice, once today and once on Thursday, and failed, I think tomorrow is likely to go higher. Also, historically on election days, the S&P 500 was up 80% of the time since 1984 because there has been 10 elections and 8 of those elections on the day of. We have seen higher prices. So the market closed at 5,712. If I look at November 5th, maybe I will buy the 5,715, sell the 5,720.
Order filled.
Okay, and that filled at 270. So we'll see how things go tomorrow. Okay, today is November 5th. The market closed at 57.82. That's the spread there, and I made 227 because the spread is worth full value. I do think the market is going up tomorrow, so I'll put in my trade.
Order filled.
And that filled at 260. So that would be this one right here. Okay, let's see what happens on Wednesday. Okay, and here we have Wednesday. The market gapped up and then continued to go higher, finishing near the intraday high. Certain stocks like Tesla are up over 10%, and it's been really good for crypto as well. Overall, the trend is going up. There was a bounce off the 50 daily EMA. So from a medium-term view going into the next couple weeks, I don't see any reason to be bearish right now. We could get a slight pullback because just over the last 2 trading sessions, the market is up 3.8%. So I would expect it to come down and retest this support level at some point, maybe tomorrow. But in terms of my trade yesterday, here's that 57.95, 5800 bull call. Expired at $5, so I made 237. In terms of tomorrow, I'm bullish again. So I put in this at the money bull call expiring on November 7th, Thursday, for 273. Now, if I go to the hourly chart, you can see that momentum does seem to be fading. The MACD is now starting to curve lower. However, the RSI is still pretty strong, up at around 80, which is overbought. But you can see during the day from 9:30 a.m. until the market closed, it continued to show relative strength. So if that continues on into tomorrow, or even if it drops a little bit, it's likely that the market will continue heading higher. Just because it made a gap today doesn't mean it's going to fill tomorrow. It could be days or weeks before we come back down. It just depends on how strong this Trump rally is going to go. So we'll just take it one day at a time. All right, today is Thursday, end of the trading session, and we have the stock market going higher once again. So that bull call I made yesterday is now worth $5, and I made 227 from that. Going into tomorrow, still bullish. Really, there's no reason to be bearish right now. So if we look at November 8th, which is tomorrow, this would be an at-the-money spread. And that's going to be a bit expensive, so I will go one strike higher to buy the 95.80 and sell the 95.85. Okay, and that filled at 235. So hopefully the market goes up. Some analysts are expecting 6,000 by tomorrow, and if that happens, then this bull call that I just put in would be worth the full amount. So I'll make about 262. On the other hand, we could get a pullback on Friday. I think it's more likely we'll get it on Monday, since Fridays are typically up days, but on average, Monday is a down day. But because the technicals are still pretty strong, I'm going to continue to be bullish for now. So let's see what happens tomorrow. Well, today is Friday, November 8th, and the market did indeed close higher above my 59.85 bull call spread. I purchased this yesterday for 238. Now it's worth 5, so that's a profit of 262, which means so far this month I am up $684 with a very good win rate of 4-1, but it's only been the first week, and so far it looks like this has been a better start than the October challenge. So the S&P 500 finally made it to 6,000. It went above to 6,012 before falling back down below 6,000 to 995. Now the green candles are getting weaker as the days go by. You can see not only are the bodies getting smaller and smaller, but also the wicks on the top for each one, they're getting bigger. So if this trend continues, then eventually we're going to have a down day where the wick on the top is going to exceed the bottom and the day will close red. And that could be a Monday because volume is slowing down. Also, the money flow, this green line here, has turned negative, even though it's a green day. And it's not always the case, but generally, this means that the upward trajectory is losing momentum. Here we can see another green day, but the money flow is going downwards, and the next day happened to be red. Most of the time, if it's a green candle, then the money flow would be up, as you would expect. But also, like this day, the money flow was negative, but this was a green day, and then the following day was red. Similar with this Friday, slightly decline in money flow, the next day was red. Same thing over here on this Monday. Even though it was a green candle, the money flow sloped downwards and then the next day was red. So at least for the last like 4 or 5 times, that's what happened. So I'm going to go with a bearish sentiment going into next week for November 11th. Even though it is a holiday and the bond market is closed, stocks are still going to trade. So if I'm bearish, then I want to buy the 59.95 put and then sell the 59.90. This will be an at the money spread. And that looks like a 210. I'm going to get closer to 250. So I will go one strike higher. That way, even if the stock doesn't move, I should still make money. I'll try 215. It looks like it might fill at around 220.
Order filled.
225. Okay, so that's pretty good. So the most I can lose is 225 because that's what I paid for this put spread, expiring on Monday the 11th. So we'll see how this goes and on to next week.